Welcome to Trading Lounge and the US Indices for Thursday, June 30th. I'll just stay with the intraday counts, and in that case we're just looking at the SPY here, because the SPY and the cash market, the SPX, they have a very clear top here for their highs. Because when we go to the futures, it looks like this could be the high in some cases, depending on what markets you're looking at, especially when you look at the NASDAQ and so on. But with the cash market for the SPX and the SPY here, this is the top, and if that's the top, we can clearly see we've got 1, 2, 3, 4, and then little 5 waves down here for 1 and 2 and 3 here and 4 here, then 1, 2, 3, 4, 1, 2, 3, 4, 5. So we've got a very clear pathway as an impulse wave. Because of that impulse wave, we should get some type of corrective wave over here, and then we should be moving down again at that point. So that's where we're at, really, with everything, just to make things sort of clear. When we move over to the futures here, and this is a CFD product, so it's got futures and cash in it. So we're going to be taking that as the top, just as I mentioned before, and we've been looking down as 1 and 2 in here, and 3, 4 and 5 coming into play. We could be able to put this here as well. It does need to extend the whole structure out, but whichever way you want to counter, we still end up with 5 waves. So I'm thinking that if you know the bullish weekly cycle that we've got at Trading Lounge, and we can reverse that, and we can look at a bearish weekly cycle. So that would look at Thursday being the corrective rally, and then Friday and Monday resuming the trend to the downside. If Friday closes softer in the red, then it's just likely that Monday will follow through on that. So understanding that, it works quite a lot, and when you see that and it is unfolding in that way, it just gives you a little bit more support and confidence in going in that particular direction, you know. And we'd use Elliott and the trading levels and price and volume and indicators, whatever you're using them. So yeah, it just sort of helps you steer in that direction. So what we've been talking about last week and this week is really to have this impulse wave down and then look for the corrective move to the upside. Now the norm is that the corrective rally should be 61.8%, and sometimes it's like accurate, you know, and it's mind-blowing, and other times it misses it so much it's sort of like, what went on there, sort of thing. So and normally, as I mentioned yesterday, we will just extend this green box down to the 50%, but we're going to bring it down a little bit further, because there's nothing worse than waiting it to get to the box and it doesn't quite get there, and you miss it and it goes down from that point. So I think it's better to trade less is more, put a smaller amount into this position up here, and then also build to the downside as it starts sort of trending to the downside. So we'll be looking for a little ABC correction in amongst all of this. So we could probably, doesn't really give me a nice little impulse wave here for that, and we could also use that as the low as well, as 1, 2, 3, 4, 5. So yeah, I think what we'll do is I'm just going to put them there anyway. And moving up into this area here, I think what we can do, we've got number between 8 and 9 here. This is a minor level here, and these would be sub-levels in here. So I really just want to focus in on what would be important here. Now the 50s, the midpoint, 55 is the second strongest number, so that's going to be important. And we've got group 1 here as well, so 10, 20 and 30. That all makes up group 1. So if 30, if we can get that there, close enough, will be near enough. If we get a tested support on top of the 30, then you can be assured to get to the 50. When you get to the 50, you're going to see profit taking, you're going to see a corrective pattern at that particular point, and then the next level up is number 8 here. And when we talk about 8, so it'll be 80, and when we talk about 8, so between 8 and 9 here, the Fibonacci sequence 1, 2, 3, 5 and 8, and then when we talk about 8 here, we talk about group 2, which is 65 and then 72 in there. So I think that's a good place to look at this retracement. So getting anywhere to the 65, if you can read the count coming up here, that's fine. But otherwise, getting to 65, that would be a nice shorting number at that point. And if the market climbed above the 50, let's just talk about this for a second. Let's just assume for a moment, I mean, what I would say, the normal pathway, will it happen or not is another question. The normal pathway is to get to the top of the 30 here, the arrival, the reaction, the first high above the level, then some sort of ABC pattern, and then a push up to the 50 at that point. There will be some sort of reaction here and some sort of classic trading levels pattern going on across here for a little bit, because 5 is the second strongest number, and then it's going to push up here. Now how far it pushes up to the 61.8%, I don't know. There's good supply over in this area here, but getting to the 65 would be I think reasonable at that point. But what I wanted to say is that when we have this little pattern here and then we move up there, then use the 50 to go short again as well with the classic trading levels pattern, because it'll be something like this. So it'll be, you look for the first low below the level here, and then you can look to add to that short position, because what you'll find is that the market normally, well, here we go here. So in this case, it came from a long way down, so it had a strong bounce back to the 65, then it went through and then it went back and retested. So really you can look to go from that short to that low to that one, and that would be the safe short just in here for that. It'll be something like that, over here. And the market normally travels quite quickly between 5 and 3 in both directions. So it's good to know that, because if you're a day trader, then the numbers 3 and 5, they're nice to trade between. I don't particularly like trading between, I don't like shorting between 3, 2 and 1, because it's always so choppy. It's good going long because you can build position steadily going long, but coming down into this here, it's always not always, sometimes it just cuts straight through, but most of the time it's choppy, bouncing between 1s and 2s and 3s all the time, So so anyway, getting at a small position up here, and don't forget that that we have to keep the stop out of the way up here somewhere. You could probably put it above the 3.9 or something, could bring it down a bit. But that, if you go short here, your stop's got to be above the 3.9. Don't put it on whole numbers, and keep it above there somewhere. And so you need to take that heat, that risk there. Okay, so doesn't have to be a big position here. The idea is just to have a very small position here, very small position here, and then when it comes down to the 3 here, I think I'll just have to remove that one. It's a bit hard to grab it. When the market does come down to the 3, it's in normal, it didn't do it over here, but in normal circumstances, you'll get a bounce back to the 40. Sometimes you'll get a bounce back to the 50. Most of the time it's to the 40, but you need to understand that. And then coming down into this space here. So you may want to short that bounce at 40 again. And then the other trade for this here would be a safe trade at number 2 here, the 38.20. When that becomes the retested resistance, then that's really good at that point to get a position here, because if that 2 becomes the resistance, then the market's going to be pulled down to this here. And because we're heading in that direction, we know that we're going to be going further down, and we want to be adding under 80 here. So basically we're building small positions in this space. That's the gist of it, okay? So, look, it's nice when things go according to plan, but they don't always, all of that said, what I'm expecting is a rally on Thursday. In Thursday afternoon, it will look weaker. And if that's weaker and you can see it and it's reached its distance here roughly, and it might go higher here, you know, whatever it is, but late Thursday afternoon, then if you start to see that weakness come in, then we can move it down at that, you know, move down at that point, you move with the market at that point. Just sort of thinking here as well, from this point down to here, that could just be 5 waves there and then have a move back at that point. So just be a bit careful about that, you know. And this is the 50-60% support here. So this is going to mirror this over here. So it just could get a bit choppy over here as well. So just keep the stop out of the way. That's the main thing at this point. Because we've got 5 waves here, that means we're pretty confident we'll get another 5 waves over here. Okay. All that said, let's go over to the NASDAQ. So this is the big bearish count for the NASDAQ. We've got 2 bearish counts. One's quite small, one's big, but in both cases we'll be heading down closer to 10 here for that. The other point is that, you know, how confident are we of this? Well, it doesn't really look like 5 waves at this point. I know that I can go 1, 2, 3, 4, 5 for 1 and 2 here, and then 1, 2, 3, 4, 5 coming down to either here or here, I think it was. We'll check on the chart, intraday chart in a moment, and then have 4 and 5 here for this, and this would be the A, the B, and the C. So the worst case scenario, this could be a wave 4 here, and we have one more move down here, and then we have the ABC back up here. The other side of the coin is that we just go straight up from this point and then we come down at that point, you know. Can we count this as a bullish count? I think we can, really. We could look at this in terms of wave 1 here, wave 2 here. Just letting you know. I mean, it's important to look at both sides and not put your head in the sand. And then 5 waves up for wave 1, 2 here, and then 1, 2, 3, 4, 5 for 1, 2, 3, 4, and 5 here for the 3rd wave here. That's 3. And the 4th wave here. And the 5th wave up here. And then this would make a nice A wave here, B wave here, and a C wave here. Now, it's important to it's important to have a look for the bullish count, because that way it gives you more awareness, of course, you know. And also what it does as well, you know, we're looking to short it up into this box here. It means that, well, if there's a possibility for a bullish count, that means that I should be really careful here what I do here, you know. Once this market is down below the 11,500 as the resistance, then you know that you're on your way at that point, you know, and you can have larger position sizes over this side of the fence, you know. So we need, you know, we think we're on the right track, but we need to look at both sides. So that's what I'm just saying. So I think we're on the 2K tick chart to have a look at this to the downside. Don't need a few things here. We don't need those. We've done all of that to the long side. Just borrow this as group 1 over here. This is all of group 2. We're in group 2 at the moment. Don't need any of that for the time being. So this is sort of where we were yesterday, and we can have this top here in different I've got different counts for these. It doesn't really matter about that at this point, but we can count this as 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and 5th wave, and then looking for the ABC here. So a little bit out of whack here for that. So somewhere in here for the A wave. This is quite, because on the S&P this was much lower here, wasn't it? It was coming down here for that. So do you remember that? So when we looked at it over here, it was down here, could also look at it as a possible low here, but we're going for the B wave at that point, so we might just get 5 waves up to that point. And so over here, I mean, it doesn't look like we've got 5 waves over here, little 5 waves. Oh, it could be 1 and 2 and 3, 4, 5, could be. Anyway, I can see that we need to go up, so we'll be going up at that point. But that's sort of where we are at the moment. So if we do go up there with the NASDAQ here, the 11,500 is a medium level, and then all of this here is minor group 2, so 65, 72 and 80. So it's going to go up there and check. So if it goes above here somewhere, say the 11.7 here, then you could look for the 11.7, I mean 11.720, but the 1100 and 700 just as important. If that becomes the resistance, then look to add there. And you can also definitely add when when the 65 becomes the resistance here, because that's the bottom of group 2. Then it will move down here. Yes, it will bounce back, but there is really good resistance here at that point. So you might need to ride that out, and then under here as well, or you might want to wait. And anyway, there's many roads to Rome, so you can think it out for yourself. But that's where we are at the moment. So Thursday rally, and then afternoon it sort of turns over, and then Friday and Monday to the downside. So see if you can sort of get on board with that. And if I've made a mistake, then this is 1 and 2 and 3 here, and ABC for 4 here, and then this will be down for 5 here, and then we'll have our ABC pattern, and then we'll go down, just to let you know if I've made a mistake at that point. But the S&P's got the 5 waves down, so I think we're on the right track. They'll all move together on that. Okay, so we're over to the Russell. So with the Russell here, I don't have a clear count at this point, because I mean it's bearish, but see, because here I've got 1, 2, 3, 4, and maybe 1, 2, 3, 4, 1, 2, 3, 4, 5 to this point. So it looks like I've got wave 1 down at this point here, and unless I extend it out a little bit, but I'd probably have to line it up with the other markets and put wave 1 here and wave 2 over here for that. So we should just consider that low in there, and it's making a nice little move up here, because we could look at that as wave, I don't know, a bit small for wave A, but some sort of impulse wave, and then 1, 2, 3, 4, 5. So we may have wave A up here for this. I'll just make this a little bit bigger than the other ones in a way. So 1, 2, 3, 4, 5 up here, then a B wave here, and then a C wave over here for that. It feels about right in that sense, you know. So that means that 1, 2, 3, 4, 5. So we'll come up here somewhere, come back into demand, and then push up into that space. So that 50 is going to be, you know, even shorting, just bringing this down a little bit, because 48 there is going to be resistance, and yeah, so could bring that down a little bit further. And then we can short under this lot here, and then also too when this is group 1 of 1700 here, when number 2 here becomes the resistance, you can look to short that. Yeah, and also the Dow Jones as well, very much like the S&P. This here sort of haunts me a little bit, I have to say, in most cases. We've got like 3 waves up here. It kind of really makes me think that we could have an A wave, a B wave, and a C wave down here. That's a little bit haunting. So anyway, once again, any positions up here, they just need to be small. Once this is 5 waves down here, once this low's been taken out down here, once we've got a rally up here and it gets taken out, then you can feel a bit more confident in going to the downside for this. So it's quite a nice, pretty straightforward pattern here, except for this move up here that doesn't. I suppose we could look at that as 1 and 2 in here, and 3 and ABC for 4 and 5 maybe. Anyway, just doesn't look quite right. But anyway, shorting under here will be the go for that. Okay, I'll leave it at that. I am having trouble loading up to Vimeo, my video server at the moment. I don't know what's wrong with it. I'm just going to keep making videos and try and sort it out between what I'm doing. Okay, but just there might be a delay today in things. Okay, cheers.